Hi guys, in today's update, I'll be talking about how can you guys avoid overtrading, how can you guys limit your trades, and on a monthly basis, you guys will see a massive change in your trading approach, in your whole setup, and you guys will even see that you guys are playing less brokerage and less charges. But how can you do that? In order to avoid that, you guys need to exactly understand what leads you to overtrading, whether it is more profits, whether are you a scalper, are you more into rushing for trades without even finding the right setup. You guys firstly need to understand that in order to avoid overtrading, you guys need to keep one thing in mind: what leads you to that. If the reason behind overtrading is that you guys are basically wanting to execute random trades based on random setups, then the first and the most important step in order to avoid that is you guys need to understand what is your setup. For instance, if I talk about those setups, you guys need to understand this thing as well. If this is how the market is currently playing out, and you see that it has made a breakout over here, you guys cannot just simply execute your trades here by keeping a stop loss here, and then on the next day if you see, if this is the same thing is falling down, you guys execute a trade here because now that it has broken its support, so you guys took a trade here with a stop loss here. You guys need to understand that there is a certain way of having a setup. So a setup is very necessary. If you guys do not have a setup, I honestly do not think that will ever stop you from overtrading, because without a step setup, you guys won't be able to overtrade. So you guys won't be able to stop overtrading, I mean. So that is the first and the most important step, that you guys need to develop a setup that on these factors I will be initiating a trade. So if you guys need to simply avoid overtrading, you guys need to go into the depth of understanding why do I even do that. And once you guys start to understand that, then you guys will understand that I need to have a proper setup, and building up a setup is the most important part in trading. So if you do not have a setup, no matter when it comes to overtrading or not, when you have a proper setup, you know where your trades are, what are gonna be your trade days, and what are the confluences which leads you to trading, or else you will just be avoiding that. So building a setup is very necessary in trading. You guys will see in our generation or in today's however the algorithm is playing out in YouTube, you'll only see people talking about you buy this, you'll make 10x, you'll buy that, you'll make 10x. So this is how it goes. But I think it's more important to focus on the basic and the fundamentals first, the right steps which leads you to make a right trader, not a profitable one or not a loss one, or I would not comment on that. Objectively, you guys need to understand that what are the right steps which can be taken in order for me to become at least a disciplined trader. The first setup, like I said, was to building a setup. Once you've got that, once you know that what my setup is, your setup will only define and let you backtest your win rate. Okay. If you have a random setup, your outcome in trading will be random. Once you have that setup, you guys will understand that fine. Out of my 10 trades, when I am following my setup, I am winning 6 of them, or I'm losing 4 of them. If not, I'm losing 6 of them and winning 4 of them. Now, what is the reason which is leading you to win those trades, and what is the reason which is leading you guys to lose those trades will be defined in that setup itself, and then you guys will be able to point that out that fine, this is where the location was, and this is the reason why I entered or exited the trade. And at the same time, that will also help you decide what was the outcome of the trade and what lead you to that. The second most important reason why you guys overtrade is that you guys simply think that if I talk about the Indian markets or the forex market or the equity market or again the CFDs or crypto. So crypto is open the whole year. If I talk about CFDs, forex and the Indian market, we usually get an off during the weekends. So out of those 22 trading days, you guys think every day is an opportunity for me to trade, and I will be trading 22 days, basically the whole month. This is not the right approach when it comes to trading. You guys firstly need to understand that what exactly is your time frame. So if you guys do not understand what is your time frame, whether you are a mid-term scalper, whether you are a mid-term investor, a long-term investor, a swinger or a scalper or a day trader, you guys won't be able to understand that how can I even initiate my trades, and on what basis or on what time frame should I initiate my trades, and how long should I hold that for. Get this clear: what is the time frame you are comfortable in trading, and at the same time, just follow the setup or the first plan which we discussed. So it is important that you wait for the correct setup to form and do not rush trades. So the second step is very important. If you guys are just starting out new, or if you guys are new to the market, you guys need to understand this. And the fact is, if you guys do not wait for the right setup to form according to your setup, then you guys just will be taking out random trades like I've mentioned earlier, and the outcome will also be random. Do not expect good outcome. And when you start expecting good outcome out of randomness, it's just that you are doing pure gambling. Take trading as a business. The charges which you pay, the brokerage which you pay, and the other charges which you pay, or the commission which you pay to the broker, happens to be your business expenses. Losses will be a part of the game. And when you basically open up a business, or when you initiate that you find you'll be opening up a business, you will see that in the initial days or in the initial months or maybe years, you will find some losses, and it's fine. Out of those losses, you guys even need to make sure that your losses are minimal and your profits are a little better, or double to what your losses are. So if you are losing, or if you are risking 1 rupee or $1 per trade, then you guys need to make sure that I am at least making $2 or 2 rupees in the same trade. If not that, I am at least exiting a 1 is to 1. If you are risking 1, you are at least making 1. In your initial days, even if you can follow a 1 is to 1 setup, on some trades, you guys will still be earning, or rather, ending your month with a basic profit or a minimal profit. So waiting for the right setup not only helps you to understand your setup, but at the same time builds patience, which is very important in trading, in investing, and no matter whatever you do apart from trading and investing as well. Once you start rushing those trades, this helps or leads you to basically FOMOing out. Once you see something spiking up a lot, you have this mentality that okay, fine, if this is spiking up so much, I'll just enter here with a small stop loss. What if this can move more 5% from here? This is the mentality you guys have these days. And if you have this kind of a mentality, and if you think that you will just keep on having the same, I don't ever think that you will be able to get out of this picture and this scenario. Rather, if you guys need to make sure, or if you guys need to just understand the fact that if I'm here to stay for a long time, then I also need to make sure that whatever I am infusing, or whatever knowledge I am gaining, is helping me in trading and is not spoiling or basically getting me confused. This is what helps you understand your setup, you waiting for your setup to form, and then you not rushing for FOMO trades, an impulsive move, chasing that, and chasing an impulsive move. This is the second most important point, how you guys can avoid overtrading. Now, the third step is also important, and again, like I said, every point is correlated to each other. And once you understand the first and the second step, the third step will be something which you guys will be easily able to spot that out, that fine, this is also correlated. And this third setup is that you guys do not trade every day. So once you start understanding that fine, okay, I won't be trading every day, and this is the setup which I have, you guys will understand that fine, every day is not a trading day. Out of those 22 days, I might only take or initiate 2 trades a month, but I need to make sure that those trades are falling under my setup. I am making sure that the location is correct, and at the same time I'm also making sure that I am not rushing or FOMOing out. So don't trade every day is something which you guys need to even consider, for the fact being, when you do not trade every day, you do not have the rush to trade every day, you are missing out a lot of bad trades, and in bad trades I just consider not those trades which are leading you to losses, but those trades whether you understand that whether this followed your setup or whether that did not follow your setup. If a trade is following your setup, it is a good trade, and at the same time if a trade is under your setup and if it's still incurring you a loss, it's still a good trade. Why? Because you followed your setup. Market acts in such a way that it acts in a probable way that you have probabilities of whether the trade is going to play out or not. You have your stop losses restricted. So in this trade or in this setup, you tend to understand that fine, I followed my setup. However, it did not follow my setup, and it's fine. It's a good loss which I'll be taking. Once you stop doing this, you will anyway see a massive difference in your trading approach, because then you will just wait for your setups to form, and at the same time out of those 22 days, even if you trade 5 or 6 days, you will again be waiting for the first point to happen. Once that's factored in, you will wait for the right setup to form, and once that's factored in, you guys will just be looking for fine, if this is falling under my belt, I'll be trading, or else I'll just avoid trading and I'll just observe the market and leave the desk. Remember one thing which is very important: whoever overtrades a lot, you're here in this business, in the trading or the investing business, to basically attain financial freedom and not to stay in front of the screen 24/7. If we are doing this to attain financial freedom and to basically layer out more gains from a side perspective view or from a side perspective business view, you guys need to stop overtrading. With the fact being that you guys do not overtrade every day, or you guys do not initiate trades every day, because even if you end up break even every day, you guys will be paying the brokerage, and lastly it's an expense which you will have to pay in order to stay in the business. So there is no point of leaking your capital or the gains which you've made out of some trades, or increasing your losses. So this was the third point which you guys even need to consider. Now the fourth point is very important, and I do not see anyone from or anyone who's basically starting out their career doing so. And the fourth point is so important that this also helps you understand what kind of a personality do you have, or what kind of an approach do you have when it comes to trading. The fourth point is again correlated with all of them, and this is basically that you start journaling your trades. Once you start journaling your trades, you have this habit of journaling everything. What fell under your belt, what did not, whether you followed your setup again or not, on what kind of a day were you trading, was it the CPI or the FOMC, or was there anything coming in and you traded that day. Your journal will only act or help you narrate your past. Remember that. When you look at your journal, your perspective should be, when I look at my journal, my 30 days journal or my 1 year journal, these were the mistakes which I made, and these were the good things or the good basic action which I followed, which helped me also make more profits. Once you understand this, this will also help you understand that journaling is not only important just to be profitable, or the one who's basically making a lot of losses. Rather, journaling is also important for the fact that you guys tend to understand that this is also gonna help me understand in the future, these were the trades which I used to take back then in 2023 or 2022. And when I look at my current setup, these are the better things which I have made. Journals will also help you month after month to basically progress or see the progress in yourself. You need to keep on stepping up in the game of trading. And you can only doing that, like I said, by following the right habits. If you do not inculcate those habits, you guys will anyways end up blowing your capital, making up or taking up the wrong decisions, and at the same time this will just lead to more misery, and you guys won't be ever, or rather you guys won't ever be able to attain financial freedom if you guys are here for that. The last point, which is very important, and this also sums up to the whole scenario of not over trading, is you guys need to wrap off your trades in the right way, and you guys need to examine that. So this comes to reviewing what do you exactly do when it comes to the trading day, and how do you guys react to your losses or your profits. So reviewing your trades helps you understand whether my trade again was under my setup or not, whether my trade was following the plan or not, Was I just FOMOing in? I'm sorry for that. Whether you guys were just running after the FOMO part, or were you guys even after you finding the correct setup, what you guys usually look out for in your setup. At the same time, you guys even need to understand when you review your trades, you guys understand my winners were a little short compared to the trades which incurred your loss. What does this impact, or what does this depict? When you understand that if you are making a loss in a trade, and in the same loss trade you guys were basically holding that swing trade for 2 to 3 days, and at the same time when you entered a swing trade with a target profit of maybe 5 hour or 6 hour, I'm talking about those R multiples, you guys see, or let's talk about in numbers, that you were risking 2 rupees and the target was to make 6 rupees out of that trade. What eventually happened was you took it as a swing and your target was to basically get that 6 or 5 rupees out of that trade, where you were risking 2 rupees. You exited where you saw 3 rupees coming in with the fact that fine, I have achieved 50% of my target. I won't let this run. I'll just, accept the profit and I'll move out. This does not happen in your loss trade. This is the reason why your losses are bigger than your profits, because you do not let your trades keep up the whole target which you've made up that for. If you have a target of 6 rupees, just make sure that you are achieving that. If you are not achieving that, however the trade has moved from your initial location or your initial entry, you guys can make sure that you guys are either exiting at break even. That is the best way of minimizing the losses and at the same time countering more on the winners. This and these 5 steps will also help you in making a disciplined trader. So it's not just about overtrading, but at the same time, these 5 steps will also help you in understanding how the market schematics work, how am I gonna counter that, and how am I gonna face that, which will eventually lead you into becoming more organized, more disciplined, and avoiding the mistakes which people keep on making again and again, and they do not understand or learn anything out of that. This is it for today's video, and I'll see you guys in the next video.